Back to Power Lunch. It's time for today's three-stock lunch. Hope you're hungry. We're looking at three names making some big moves after reporting earnings. Here with our trades is Malcolm Ethridge, CIC Wealth Management Executive Vice President and a CNBC contributor. First up is CrowdStrike. So these shares are up around 11% after the company beat on the top and bottom lines and also provided a strong first quarter forecast. Malcolm, what's your take on CrowdStrike?
So this is actually my favorite sector right now in all of the markets. Cybersecurity is the ultimate defensive sector, right? It's a non-discretionary expense, regardless of the size of the company. And worldwide spending on security and risk management solutions is expected to be up something like 14% this year over last year. And that says nothing of what it looks like for government agencies around the world. So with CrowdStrike being one of the two largest players in that space, I love this name right now, even with it running after earnings.
All right, let's move on, Malcolm, to Foot Locker. Shares there tumbling after the company reported a holiday quarter loss. Weak guidance for the current year. Company in the midst of a turnaround just delayed its profitability goal by another 2 years. You say buy. I would look at some of the data here and go bye-bye.
Yes, I think the sell-off in this one is a little bit overblown if you just consider the shares had already been beaten down significantly since about June of last year, right? The company has plans to move away from its dependence on malls and focus more on a new set of partnerships that they have, which is the reason that guidance has been so light. Plus, they have plans to expand into Asia, right, with a partnership with the NBA, expand further into Asia, I should say. So with shares being down more than 45% now over the 1 year period, I think this actually looks like an attractive buying opportunity for anybody who's been interested in this name for a while.
What is the concept that is going to move them away from mall focused? What is it?
So they're turning to other partners who already have distribution to carry their products. So like partnering with the NBA, for example, potentially there's the idea of selling shoes at stadiums and at different NBA activations and things like that. So it gets their product out there without having to have the brick and mortar focus and the mall focus.
Gotcha.
Understand, though, it's going to take them a couple more years to get to their plan. At least that was, I think, what drove this stock lower initially. And finally, we do have Nordstrom. Despite beating analyst estimates on the top and bottom line, shares sinking 16% today as the department store chain issued a muted outlook for 2024. They're not alone, though, Malcolm. A lot of companies are sort of worried about the consumer and the response. What's your trade on Nordstrom here?
Yeah, so I consider this one a hold. I don't think it's necessarily time to go buying this dip, but I also don't think it's a screaming sell either, right? Similar to what we're talking about with Foot Locker, these guys are mall focused, and we all know the challenges that department stores have been up against with more people working from home permanently, and even those who have gone back, workplaces have shifted to a less formal wardrobe policy, which impacts what Nordstrom's core customer is buying. But with that said, Nordstrom has managed to return to pre-pandemic revenue numbers, which I think is encouraging. So I just don't, feel good about the dependency on mall retail, but I don't necessarily think you have to go dumping those shares today either.
Okay, fair enough. Nordstrom shares down 16%, and you're calling that one a hold. Malcolm Ethridge, thank you very much for being here with us today for Three Stock Lunch.